Howdy, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, November 17th, 2022. Starting with our economic release spotlight today. So, we got some more hard economic data out of the U.S. economy and soft data as well. One theme we've been sort of pounding the table on in our 42 macro research behind the paywall is the sort of dichotomy between the booming coincident and lagging indicators relative to what I consider to be busting leading indicators. So, talking about the sort of leading indicators, isolating housing specifically, the NAHB housing market index came in at 33. That's a tick down of 5 points. That 33 index level is the lowest print we've seen since the nationwide lockdowns of August or April of 2020. Big, as I mentioned, that big 5 point swing down is pretty big in terms of the context of that time series as well. And then this morning, we got the housing starts data and the data that leads the housing starts data, which is the building permits, and both continue to slow. Looking at this on a year-over-year rate of change basis, building permits decelerated by 700 basis points to down 10.1% on a year-over-year basis. That's a 2-month low. And then you had housing starts decelerate 430 basis points to down 8.8% on a year-over-year basis. That is a 3-month low. Talked about this in our macro scouting report last Tuesday. You're absolutely seeing an utter collapse in the housing market, particularly from a sales perspective. You're now starting to see that collapse spread to the construction side of things. Again, housing starts down 8.8%, building permits down 10%. So we're going to start to see. It's likely we may see the things, the sort of construction side of the activity catch down to where sales have been. Sales, if you look at existing home sales, pending home sales, new home sales, all down somewhere between 20 to 30% on a year-over-year basis in their most recent months of reporting. So, it's our view that this is going to weigh on U.S. economic. It's already weighing on U.S. economic activity. It's likely to continue weighing on U.S. economic activity, right? It's a direct hit to GDP when housing construction slows. It's an indirect hit to GDP when housing sales slow down. If you think about housing sales and all the remodeling and real estate real estate agent activity associated with that, you've had less sort of the rise in mortgage rates will slow down marginal purchases, marginal housing market activity, and as a function of that, you're going to have less people moving, less people quitting jobs, and people tend to, when they quit jobs, they tend to go to jobs with higher wages. So you have slower wage growth. You'll have sort of slower consumption growth, cerebus paribus. In sort of all things being equal, as a function of all those different dynamics. So that again, it's a cycle. You don't go from booming coincident to lagging indicators on Monday into a deep recession on Friday. It's going to take time for these sort of classic cycle dynamics to play out with respect to the U.S. economy. So go check out the lead off morning note today. I explain it a lot better in there with actual charts, particularly as it relates to the timing with which we're likely to see a hashtag actual recession hit the tape. So getting into my Loanbo dashboard, starting with going down the global macro rundown, similar setup as we've talked about over the last few days. Nothing really in the nothing violating from a probable range or from a trading range perspective at the current juncture. U.S. dollar, that's still bearish on both the short-term and medium-term durations. Gold, still bullish on both the short-term and medium-term durations. 10-year treasury yield, nominal bearish short-term, now bullish, still bullish on the medium-term duration. S&P 500, that's bullish on both durations. VIX, bearish on both short-term and medium-term duration. NASDAQ, bullish on the short-term, neutral on the medium-term. Russell, that's bullish on both durations. Bitcoin, Ethereum, bearish rather, on both durations. Shanghai Composite, bullish short-term, neutral medium-term. And then lastly, crude oil, neutral short-term, bearish medium-term. So again, not much to call out from the range perspective. We've said, take your time. I think our subscribers are well aware of our views, both from a next, kind of a short-term perspective, but also from a medium-term perspective as well. So, just let the game come to you from a signaling perspective. A lot of mistakes are made, sort of doing the research and then putting the trade on. That's a very retail rookie mistake to make. I did the research, I have a view, now I got to put the trade on. No, let the market come to you. Let the research be the repository, the shopping list in terms of what you think you might want when you go to the grocery store. What actually makes it into your cart and in the bag on the way out the grocery store should be a function of letting the market come to you. Anyway, getting into my free daily alpha tab, where we have about 300 ETFs in here, all representing individual factor exposures, sorted by the odds in the odds column for things that are most overbought. Not much signaling on that. Not much signaling. Very overbought this morning, so nothing really particularly actionable there. Let's go down to the bottom here. What's most oversold in this list? We got Indonesia. So we talked about Indonesia. This is one of those economies that actually has positive grid regime fundamentals. Definitely go check out that research. We've talked about Indonesia in our research as well in recent weeks in terms of the grid regime outlook there for Indonesia. Now finally starting to get oversold, but definitely don't like that price action on the lower boundary of the long bill trading range there, signaling to you that it may not be the best spot to be buying the dip in Indonesia, although I do like this this very wide implied vol premium. But then in the context of our broader macro risk management views, I'm not so sure that emerging market equities is the place to be heading into year end. So with that, Darius Dale presenting our macro minute for Thursday, November 17th, 2022. Best of luck out there today. We'll catch you back here tomorrow. Cheers.